Good morning, everybody. Welcome to the Flow Show. It's Friday. We made it through to the end of the week. And today's pips are beer pips, if we can make any pips at all. That's what we're hoping to do. Morning, Kay. How you doing, mate? Nice and chilly where you are?
Yeah, colder.
Yeah.
We are in the same region, though. Although I may be a bit more south than you know, like a couple of yards.
Yeah.
Yeah, it's very colder. It's cold outside. It's going to be a very chilly weekend.
Yeah, windy one, apparently. And then we get deluged with rain again. Looking
Yeah,
forward to that.
yeah.
So happy days. Anyway, we got some sun and we enjoyed it while it lasted by staying indoors.
Yeah, exactly.
So
Oh, yeah,
there
the
we go.
sun is out. Okay.
Yeah, take a picture of that. You might need it to put on your wall for the next few days. Right, let's get cracking. Suspected yesterday that China was in meddling with their stocks again, or by proxy meddling with their stocks again. That was confirmed overnight, where China's biggest brokerages had restricted short sales after that move that we got in stocks down and up. It's not doing an awful lot this morning. Hang Seng's back down to its lows, but China's still being propped up there anyway. There was also chatter that they had banks in selling dollars again, part and parcel of their playbook, as there's pressure weakening on the yuan still. There you can see we had got up to the 23s, and obviously that news coming in now about China selling dollars. That's likely the price action we see there. So they're still fighting tooth and nail to keep this one lower, facing some pressure. Big news out of Japan overnight. CPI coming down, core coming in as expected, 2.3%, dropping from 2.5%. The headline CPI coming down to 2.6%. I'm not sure what the expectations was for that. Let me have a quick gander. Was expected to come in at 2.5, so it beat expectations. One of the core numbers came in as expected, 3.7%, which was a pip down from the prior 3.8%. Not what you need just ahead of, hawkish market players won't be needing that data just ahead of the Bank of Japan next week. That plays into them staying on hold and maybe just giving a few more cautionary lines in the statement. As you can see, what that did for dollar yen overnight, it took us up to fresh highs. But after that, our mate Suzuki finally decided to wake up and throw some comments out saying that FX moves are driven by various factors and the government is watching FX developments carefully. Also said he won't comment in advance on what the government expects to do. We know there was little expectation for next week, Kay, but does that maybe put Ueda on a bit more of a defensive footing for those inflation numbers?
Defensive to in what sense? That he will say they are coming down?
Yeah, he might sound a bit more cautious about the inflation picture.
He did say that he was expecting inflation to come down second half of the year, and we are second half of the year in fiscal Japan. So in essence, I don't think it will change anything, really. And I was saying as much last night on the chat. I said unless this thing comes out really far from expectations, it shouldn't change anything for the Bank of Japan. They are on this very slow path, as we've already said multiple times. It did push dollar yen pairs to fresh highs, but I think now being Friday, and then we only have Monday left, and they're meeting on Monday, Tuesday, right? So we will have Tuesday morning. It's Tuesday morning, right? That we our morning that we have the results of the Bank of Japan.
Yeah,
I
23rd,
don't
I
think
think.
it changes. Yeah, there we go. It's Tuesday morning. I don't think it changes anything at all. It's as he expected, so his preparations will probably go on as planned. And again, base case is that they won't change anything with a low percentage chance that they do something about YCC. I mean, God, yields ticked up just a little bit, but that's just you know, I mean, all yields have been ticking up, right? Of the in the past weeks. Just a bit of a response to what's happening in the rest of the world. But if they want, I think if they want to create a surprise, which is not, again, the base case, is very low percentage, they could abandon or yeah, just let YCC go, because there's absolutely zero stress in the system, and the big Japanese players have already said that they don't expect yields to fly anyway. So it may create a wave in the market, and which is probably why the markets now are taking profits on their yen shorts, and likely some people, smart cookies, trying to play the other side for the small percentage of the change. But again, the CPI numbers for me, they don't change anything to Ueda's plans anyway.
No, it's more a case of what the market thinks.
Yeah.
You know, if the market thinks he might turn a bit more defensive in his comments and he doesn't, then that might be taken hawkishly. You know, we all know our markets are like goldfish, can change their thinking from 1 minute to the next as the data tells them to. Anyway, moving on, and speaking of data, something I got completely wrong: UK retail sales. I thought there's a chance these might come in positive and maybe better than expected. Well, that'll teach me to listen to the supermarkets, because they absolutely fell out of bed, which was, funny enough, what I expected after the November numbers. But I got sucked into all those good headlines from the supermarkets and stores about food sales. And retail sales got crunched. So the bulk of spending was done in November, and that dried up in December, according to those numbers there. So rather stinky numbers. However, it hasn't done too much to dim the bright light shining over the UK at the moment. Cable obviously suffered, but hasn't suffered that much. Bit of a surprise, really, that that move. You would have expected maybe at least 100 pips out of that sort of data, Kay.
Well, I don't know. The thing is, the ONS report came out, and then you saw like all volumes went down, but the value hadn't changed really of the sales. So it seems that they went for higher price items in December to put under the Christmas tree, and I think that may have helped the sterling to contain whatever there was to be done, and also I think the market kind of expected weather-related stuff to come in weaker. Yeah, it hasn't really. If you look at the cable, with what, 10-15 points away from when it came out, euro sterling same. Yeah, I mean, sterling is probably trading other things now, such as repricing of Bank of England and things, and people saying the Bank of England this or that on those retail sales. I think it's a foregone conclusion. They if the next number comes out a little bit better, what are they going to do? Price out cuts again? I don't know. I think the one line there that the ONS said, that the value of the sales was sort of equal, or just even a tad higher. I think that has told the sterling market not to get too excited about it.
Yeah, very much. JP Morgan, this was yesterday. They now see a BOE cut coming in August versus their prior cut starting in August versus their prior call of November. In their last call, they saw 2 cuts in 2024, both in Q4, and that call was raised from no cuts in 2024. So slowly but surely, they're bringing forward their rate cut expectations. They're still probably one of the few who are still seeing Q4 as Q3, Q4 as when rate cuts will start, but they are creeping forward. S&P's Jordan says the inflation forecasts suggest no hikes are needed. There wasn't much else out from the basketball player yesterday, was there, Kay? That's about as much as we got from it.
No, I think he was very happy that they were all talking about climate and stuff, and how that would impact monetary policy, where they all agreed they didn't know a thing about it. So
No
yeah.
surprise there then.
Huh?
No surprise there then.
No surprise at all.
Nothing about it.
No. He was very happy. He did seem a happy camper when he was there, which probably suggests, as he said today, or was it this morning, right? Or yesterday evening, and then the day before yesterday, that he's happy where things are. Doesn't change anything for what's happening in the Swiss right now, I guess.
Yeah, very much. Another mob who don't know what's happening is the ECB. Their minutes said that they only have a blurred signal on underlying inflation. These are the guys deciding monetary policy based on inflation, and they don't have a clear idea of what it's doing, much like the rest of us. Does it make them much different from us? I suggest not. They also said that the data suggested that fears of a hard landing have been alleviated. No hard landings seen in the Eurozone. What they do need to see is convincing evidence of a sustained turnaround in wages, and that had yet to emerge, and that this was necessary for them to deliberate further about rate cuts. So another item that goes on the shopping list of what we need to watch out for in terms of what the ECB may do. More than a few ECB members have mentioned wages as a big clue on what they're going to do with policy. Lane being one in particular who says that he needs to see Q2 data on wages before he makes a decision. He won't get Q2 data until they're well into Q3, obviously. So wages are front and centre in the ECB's thinking, as well as inflation. Fed's Bostic was out repeating a lot of what he said previously. He wants to see more evidence we are on a trajectory to 2%. He repeated his call for rate cuts starting in Q3, with care needed not to cut too soon and risk renewed demand and price pressures. Data yesterday from the US came out largely okay. Jobless claims put in a good print, coming in below expectations, 187k. Continued claims dropping back as well. Possibly some New Year shenanigans going in there again, weekly numbers, but market took it for what it meant on face value, and positive numbers. Housing starts and permits also coming in with some beats of expectations there as well, although one was down on last month still. That's the housing starts, but permits picking up there too. The Philly Fed didn't shake any trees as the Empire did in terms of the numbers that dropped. Not an improvement as expected, but still better than last month. Some of the other bits and pieces underneath there or thereabouts. CapEx rising to a positive from a negative. Employment was negative, but not as much as last time. New orders not as bad as last time. Prices paid a bit worse than last time, but no big, huge shocks in those numbers. US mortgage rates have apparently fallen to the lowest level since May, according to Freddie Mac data. A headline I wouldn't give too much thought to, but we are in cut mode with the US, and they will be looking at things like this to see how much financial conditions are easing. If markets and assets do a lot of financial easing, it leaves them less to do, and they can push back further against rate cuts in the same way that financial tightening did a lot of their job for them and pushed back that potential last hike that a lot were expecting. So if you're going to watch financial conditions one way, you've got to watch them the other way as well. So mortgage rates coming down plays into that as well. More headlines on job cuts. Macy's going to cut around 2,350 jobs and close 5 stores, according to reports. That's 3.5% of Macy's overall workforce, which that excludes seasonal workers. 3.5% doesn't sound like a big number. Again, like I've been pointing out with the Googles and the Metas and everything else, it's not big amounts. These are not huge cuts, but as I said, the trend is going that way. More people talking about cuts than hires. Bosch as well is cutting 1,200 in their software development department, and that's mainly to do with the auto sector. They do a lot of they built up a lot of software developers for auto driving cars, but there's been slow progress on that, so they're cutting back as well. Again, only 1,200. Not to dismiss those 1,200 people maybe losing their jobs, but the trend is your friend, and we're hearing cuts to jobs, so it's not going the right way. Let's hope we don't hear them coming into the tens of thousands, and that's when you start getting panic over the NFP and things like that. The can's been kicked to March over the funding issue in the US and the shutdown. The House cleared everything yesterday. Biden signed it off. So, as I say, the can kick on stopgap funding has now been kicked to March. We can all breathe a sigh of relief until probably mid-February when we do it all over again. But the ongoing saga of can kicking continues. K-Man, anything on your radar?
On my radar, just a couple of things that I saw yesterday. So the US watchdog says that they are preparing a rule forcing banks to tap the Fed's discount window at least once a year, and that's in an effort to reduce the troubled time for some lenders. That's part of their plans to make work of trying to alleviate some possible further future pressure again on regionals, I guess. I haven't read the whole thing, but that caught my attention, which is, we could say, perhaps per correlation a little bit positive for the banking sector, but it's still in the pipe. Yeah, it's they are preparing this kind of rule for the banks to go at least once a year to this discount window. So that's perhaps a bit positive for the banking sector, I may say. And the other one is a bit bizarre. This the German finance minister Lindner. Well, of course, I mean, he's finance minister. We could say it's a bit logic. He talks about spending, but then he says Germany can't go on a spending spree, as this would undermine the ECB's efforts to tame inflation. So he says the main battle is still inflation in Germany, or in even in Europe, because he speaks about the ECB. So I wasn't sure how to read this involvement in what the ECB may want to do, or is he just supporting the likes of Nagel and what's her name?
Schnabel.
In their hawkishness. But I found it a little bit of a bizarre line yesterday, and I was even thinking, like, well, is this going perhaps to support the EU yields a little bit? But I don't think that they rose more than what the dollar yields were doing yesterday. Haven't looked at the differentials. No, the differentials haven't changed that much. But yeah, I found it a little bit of a strange line, that one.
Yeah, I get where you're coming from on that. Let's take a quick look at yields, because US yields are continuing to rise. Maybe, I don't know if yields are leading dollar yen, or dollar yen last night led yields, just on the back of the inflation data. But US yields still ticking up, still coming up from their year trend so far, after the lows made just into the year end. So again, it's looking like the trend is your friend for the moment for this one. Data still playing ball, keeping the higher for longer rhetoric for the Fed. So as I mentioned, dollar yen made that move up. We're now down about 100 pips off those highs. It did pretty much hit a level that I had on my chart going back way back when. Pretty decent support and resistance level when we made the secondary move up to 152. So that's where it ran into trouble. We're now again back down below 148. So we made that new high, kept the trend going, but that we've come back so quickly just might mean we're going to get a bit sticky around here. Again, if we get another move to sort of 148.40s again, this levelish here, 48.50, and hold that would suggest we may be on hold a bit while we move towards the Bank of Japan, which I am expecting a bit. Perhaps players will take some chips off the table and just keep things calm until they know what's happening with the Bank of Japan. Otherwise, the rest of the levels still in play. We got this level again around about 147.60, then down to that fib. 147 is still the big level down below, should we go there. But maybe we just need to see a bit of price development going on here to see whether we're going to make new highs or not. We don't have too much data out today. We do have the Michigan preliminary numbers for January, so those first numbers might give the dollar a bit of movement, depending if there's a big variation. That's coming up later on this afternoon. Aussie dollar. A few of us trading this in the chat room off the zone down here. I've been slicing and dicing on the way up. Just running into a bit of trouble in this 66 handle. We made a pip above, but couldn't retake it properly. Need to see 66.0020 taken out to continue this move off support. Then we have the bigger 66.40 to keep an eye on should we get up there. We did see prior resistance coming in just below it at 33 after we made the break. So keep that on your radar as well if we get up into the 30s. But it still looks pretty slow going, although technically we are holding this 65, 70 area. We were below it, couldn't get above it. Now we're above it, and now we're just about holding it. So it's given a bit of a springboard for a move higher, but still all small stuff going on here. And that's a particular feature of the Aussie. It doesn't like to make big, massive waves when it's coming off of support. It usually tends to just creep up. So we're not out the woods yet as far as I'm concerned for this one, but it's going the right way for my trade anyway, so I'm happy with that. I'll have just a quick look at Euro Sterling. I know Kay's probably got a bit more to say on it as he's trading it a bit more around at the moment. It held yesterday down in the 85.50 area, which had been a previous area of support on my chart anyway, and it's done that again. The data obviously helping it back higher. Not really putting in an attack on 86.20 just yet, so we're boxes within boxes within boxes at the moment, and those boxes are getting smaller and smaller. So if the pound is going to see a bit of negativity coming in, then we might start creeping up again. But as Kay said, if we get another good bit of data or something to suggest that retail sales was a one-off, then maybe we're going to head back down there and continue this trend again, a trend we've seen at the start of the year. Kay?
Yeah, I'm actually trading it relatively close to the chest, as they say. I have been, and Ali just said, slice and dice is my strategy from today. That is a strategy that Ryan and I have been using for years, and it really helps to manage your risk and manage your positions. And we can talk another day, perhaps more in depth about that, or you can come and join us in the FA community, where we talk about stuff like that all the time. I'm going, as I said, I'm going to trade it close to the chest. I've been short in this Euro Sterling, as people know, for a while, like really into year end and stuff as well. And then On the back of the earlier data, I was short at 86.20, hammered it again around 86 the figure. Started to buy back on the way down yesterday, last leg of what I wanted to buy back in the 85.50s. I always respect those levels. And now I'm keeping the core short, which is really a lot less than I had on until last night. So and as I said, I'm going to trade it really close to the chest. We have seen this new little range develop, yeah, with the top in the low 90s. If that goes, I think for the week I'm going to be out, because I reckon if that goes, then we have a chance that people are taking it back through the figure, back up to 86.20, and then we will see what happens then, right? That's the way I'm going to trade it. Just it's a P&L protection plan, PPP, you know. And I think it's just wise for now, not to push the boat too much. Imagine it goes up to 20 and then somebody comes out with a negative news on the sterling and we trade 86.35 or so. I'd be looking at and back and saying like, well, that was a bit of a stupid hold, you know. And there's always the next day. You can always re-enter trades if the news is good and we start to break lower again. Why not re-enter, you know? That's the way how I'm going to trade it. And a bit similar on the cable. I've reduced a little bit on that number, just on the reaction of the number, but cable is holding. And so the base idea there is still to monitor what's happening around 126.10, 126. I guess that's a really good enough level now to pay very close attention to. If we would see a retest and hold once more, I think it's just going to tell us it's not going to go below there for the foreseeable future. If in turn it breaks, it's now a good enough level to probably think that there's something wrong with the sterling, right? Yeah. And on the top side, we need to see that what is it, 10.20 start to go, 127, 10.20. If that starts to go, then we have a fair chance, I reckon, to trade back into the 128s. I think in general, and I've been saying that as well in the room, I think in general, the start of the year repricing of whatever the market may be doing, and the rebalancing of what's happened into year end has probably ran the best of its course. I'm not saying the dollar cannot go higher. It can. Of course it can. The market can do anything. But if we see over the last, let's say, 10 BPs or so, if you take the US 10s, the US 2s even, the dollar has stalled because the rest of the major currencies is also repricing, right? So that's where I think, and I think you agree on that, Brian, as well, because I know your positions, and thinking that, okay, that's been done. Now what's next? And in the meantime, we'll trade ranges. It's as simple as that, right?
Yeah, I mean, I hope people understand that, and this is exactly what we tried to do on the Flow Show in particular. You know, we were flagging the rate cut game since last summer. We were saying it's going to happen at the end of the year. It's going to get extreme. It's going to pick up. We got that. We got exactly that. And now the market's had that extreme moment, and now it's playing the what next. You know, it's doing the reprice of the reprice of the reprice. It's as I say, it's like dropping the pebble in the water. You get a big splash at first, and then little ripples after. Well, we're in the little ripple part of the rate cut game, and that needs to be reflected in your trading. Now, I spoke about the vols. You know how the vols are still pretty low for cable and euro dollar, but they're high for dollar yen. You have to know what pairs are making moves when, and what pairs are volatile and what pairs are not. And the reason is because this market is playing this what next game. But to rally in your slice and dice, you know, you can take it in two different ways. Okay, there's always different ways of playing even something like the slice and dice. You know, Kay's talking about it. He's playing, you know, shorts, 86, 50s, 86s, cutting them here, cutting them there. You know, I've been in euro sterling long since last July. I've still got a position from last July. My slicing and dicing is on a much bigger scale when we hit some of the bigger levels. But the strategy is the same. It's all about locking in your profits where you can and trying to run the trade as much as possible. And we're both in a similar situation with cable. You know, I'm long from 126.39, and I've been slicing as we get the moves up every 20, 30 pips or whatever. I take a bit off, much faster slicing because we're in a tight range, 126, 128. I've got 200 pips to play with, so I'm not going to be slow taking profit. Same with Aussie dollar and the buy. I did 85.39. I got out at 55. I got out at 75. I got out at 95. Some of the position, just 20 pips here and there. But now my stop is just below this zone at 15. So I've got 24 pips of risk left on the rest of the trade, and I've taken, you know, 60 odd pips in profit. So it's all about moving up. If we get through 66s, I'm going to yank my stop up probably just above entry. So the rest of my trade is no risk to the rest of the trade, and then we see what it wants to do from there. But the slice and dice is something I would encourage a lot of traders to get into if you can do it. I know it's difficult for US traders, but anyone else, you know, it's my thing. Don't give up a winning trade. Run it as far as you can while protecting your loss behind. And it works, Kay. You know, we're both testament to that.
Absolutely. Yeah, I mean, absolutely. And it keeps your account, on the one hand, it keeps your account ticking over. You reduce your risk to zero. And by by taking a little bit of profit, your account likes you, and you can think about other stuff as well. That is the thing. You're not, if you take one position and you let it roll, and that's going to make or break your week, or for the people trading shorter term, your day, or for the people trading shorter longer term, your month. If you're stuck, or actually if you're prisoner of one trade, I would go even as far as saying if you're in the straight jacket of one trade, you're never going to be a trader. That's the thing as well. You're playing something. Of course, it can be a very good trade, but if you put too much in it, and if you, I mean, I've been in the markets for 40 years, okay, and okay, I've only been like retail trader for the past 7 or 8, but it's something that just kept my account alive all the time, and the big thing is be ready for the next opportunity, and and such a strategy around a core, like for instance, I can do smaller amounts on like the cable is a bit smaller. The euro sterling, I actually pushed it a little bit yesterday. I really hit it around 86 or 102 or so. But now this trade is I can look at other stuff. I can look at Aussie, I can look at dollar yen, I can look at the Swiss again, or something. It's really keeps our account ticking over, and especially if you are in stuff like which are going to cost funding, that is something as well, which for instance, if I would be, let's take for an example, short dollar yen, which is costing 4% differential, is like 3 pips also every day, right? If you're short dollar yen, if you're short at 148 and it goes down to 147.50, that is paying a lot of your carry if you want to stay in the position for the rest of the week or so, or the month. And if you take those 50 pips, then it just relaxes your mind as well, and you don't have to worry about your funding anymore. It takes away worries, and it gives you opportunities for the rest. And I'm not saying I'm not keeping stuff for the longer term. I'm longer than a Swiss call for 6 months. I mean, I'm taking long-term positions, but it's the rest. What you do in the rest, that's keeping your account alive and giving you ammunition to do other stuff and freedom to do other stuff.
Yeah, I mean, one of our roomies got a bit caught out with a carry on dollar yen short. He didn't realise, especially over Wednesday, that you pay 3 days. He was wondering what hit his account. And yeah, when you're in that, and I did the same when I had my short dollar yen. You've got to trade for 2 things: A, to make the profit on the move that you want, but also you've got to take profit to pay for the trade itself. It becomes another factor for things. But listen, we understand not all of you sit in front of your screens 24/7, almost like we do. You know, you have jobs. You can only look at trading now and again. We're not saying don't put on a trade and put a profit target in and take your profit target and you know, run away with it. That's absolutely fine. But if you do sit at your computer longer, if you can monitor your trades longer, even when you've got a job or whatever, that's when you want to just try and push it. And it also gives you interest. You know, if you take a 20 pip profit, great. But then you also face the psychology. Maybe you sit there and it rallies. If, let's say you bought something and it rallies another 20, 30, 40 pips and you sit there going, oh, shit, I could have grabbed that. Why didn't I grab that? Well, this gives you a chance. Using the slice and dice gives you an opportunity to try and grab that. It doesn't always work. And sometimes you won't make as much money. You may do a slice for 20 pips and then get stopped out on the balance. But the likelihood is if you keep your stops in balance as well, you either just break even or you only make half as much money as you set out to do. And making half as much rather than losing all of it is a great trade in itself. So, yeah, there's always different ways to look at trading strategies, but maximizing your profits should be top of the list. Once you know how to trade competently as well and manage your risk.
Right.
Okay, do you want to have a little look around if you didn't have anything to add to that?
No, mate. We are not going to do like the whole shebang here on doing like a whole how shall I say study or or on how to trade. But
yeah, that'll
look,
be a webinar on its own.
Excuse me?
That'll be a webinar on its own.
That will be a few webinars on their own if you and I start to chat about how to trade and how we trade and what's possible out there. That would take a really long time. Right, let's where is the thing? Okay, Kiwi, you know what I showed you, yeah? Ali, because you're asking to evaluate your trades. I've been showing you this one, right? The Kiwi, you know that support zone. We're really not far away. I know it's a daily, yeah, it's a bit of a longer term one, but I think it's important enough because it held the 200 DMA. It went into the cloud, but it doesn't close into the cloud. Okay, so you have to take it into account. On the other hand, as I said, we are not yet, or not actually moving above this 61.40-60 zone. That's it's a bit stuck in it's stuck in this range, right? Ryan already showed the Aussie dollar. It's holding pretty well, I must say. I'm going to take you to the end pairs, all right? Because we are getting closer to that Bank of Japan meeting, and it's probably not a bad day to have a look at them. We are getting into relatively important levels on both the dollar and the yen crosses. Okay, I was specifically looking at this 149.5, 149.75 zone. If you would reach there ahead of the Bank of Japan, it's still not too late, but because the yen can move a bit fast, but I'm seeing those prior levels now, and I think people here are starting to take profits. And Bank of Japan is closing in. It's on Monday. It's on Tuesday morning, so we'll talk about it on Monday, I guess. But I'd say, for one, don't be blindly short yen either. Even if you've got the funding for you, it can lose a big figure relatively quickly. And I think that's what's going on right now. I don't think it's Suzuki per se, but we had the spike after the CPIs, but always take into account that the market will take a bit of profit and perhaps some speculating on this really low percentage that the Bank of Japan could do something about YCC. So my base case is still that they don't move anything, but they still will evolve in their statement towards preparing the markets on what to do. A very interesting one though here is this euro yen, I think. Look at this zone here, between 161 and a quarter and 162. Okay, and look where we hit. We hit right into the zone there, 78.6, some horizontal resistance as well. Lows here, high here. I think it's not a coincidence that it stopped there. In the meantime, okay, in the meantime, look at the picture since the start of the year. Since the start of the year, it's still one big stairway to heaven, right? So don't go blindly short, even if we get below 160.60, for instance. There is more to come. I reckon we could see more correction. But for as long as you stay above 160 here, I wouldn't really be short for more than just a real quick one, you know. In the meantime, we're still in the channel. We've got to go under 160.65, I reckon, for it to accelerate a little bit into the end of the week, and perhaps on Monday, if the market has more to do. But then come Tuesday, sorry, on the Bank of Japan, then we need to evaluate what the Bank of Japan has done. And then we'll see a lot clearer, I think, on stuff like dollar yen, euro yen, and sterling yen as well. Sterling yen really ramped up, and DK in our room has been talking about a blowout in the sterling yen, and then a comeback. That's exactly what happens. Actually, we went above the prior high, ramped higher for a quick 30 pips, and then completely reversed. So the market is definitely taking profits on yen shorts, or being cautious to see what happens on the BOJ. Okay, so can it go back up there? I say, but I do think that if we see it back up there after the UK retail sales as well, we are going to find a bit of resistance if we test it up there again. And I wouldn't be surprised if we come back into this kind of area ahead of the Bank of Japan, like the 186s, you know. It's possible. The yen is volatile enough to do so. China finally, the dollar China, they finally managed to put a top in it, a temporary at least, and we are back under the first level of interest, 721s. Look at those moving averages around 718. I think we can come and rest on them, perhaps into the close of the week, and see what China wants to do with it in the coming week. I think that those were this trend line here is one to pay attention to for the medium term, and it's of course rising, and it's now lying around 711, 712, where we had this uncertainty. Yes, we dipped below, and yes, we did a stop run on the end of the year, you know, on all those dollar sales. But since then, it's rebounding. So again, yeah, 718 for the day, and then that's going to take us completely neutral again, I reckon, for now. Anyone? Oh, gold, silver, bouncing, right? Bouncing where it should have on that gold. Yeah, I'm still remaking my charts on some of the instruments, but you can see. We were talking about those low 2000s. I had it on my old chart, but I have to redo the chart on gold. But we're in a little bit of resistance here in the 2030 zone. I'd say it held where it had to hold, and we now will see what we're back in a range for me. Okay. Also on silver, we went a little bit below, tried it here, and we came close to the and actually, did I not see that? one tagged yesterday, the 22.35. I don't know. I saw a low somewhere, 22.35, but my chart doesn't show it. I'm pretty sure we went into the 22.40s, no? But this is, as I said also on the face show, this is my zone of interest. If it would come down here, I'll be looking to add, especially as well that I think that the repricing of, yeah, exactly, Gavin, right? Why is this not showing this low? Am I on the wrong screen? And I will need to, yeah, I will need to redo that because I also think that we really tagged it yesterday. So yeah, that's my zone of interest. It could already be enough, but always I always like to wait for confirmations to see if we can get there. Okay, but if we don't, we probably range trade for a while as well in silver right now, a bit like in line with the rest of what we're seeing. And then the final ones is the Swiss. Just zooming on the. EuroSwiss is now in an attempt to break the 23.6, and we are probably, well, my position says we are probably going there, up into the 95s for a starter. You know what I've been saying? I think in this, we're in this channel. We have heard from Jordan finally. He says he's okay with everything. So I think there's still room to correct the Swiss franc, all right? And I think ultimately Euro Swiss may be moving up here, and the dollar Swiss is seemingly forming a bit of a channel now since the start of the year, and I reckon 87s and hopefully back into this high 87, around 88 zone now. We are slowly grinding higher. It's the Swiss. It's not as explosive as other stuff unless the S&P declares something. So it's probably going to be a slow grind higher together with the rest of the Swiss crosses. And that's it for me, Ryan. Back over to you. TGIF, everybody. Trade safely.
Thank you very much, mate. The only thing I did want to flag quickly, I'll just bang it up. Myself is just the S&P, having another look at that 4,800 area. Sorry, mate, what was that?
No, I actually was going to remind you the S&P because you are watching it very carefully, right?
Yeah, I've got it here. We are having another go at 4,800. I'm still running some buy stops in this one. Although, as I mentioned in the room, I wouldn't want to be triggered really on just the futures price moves as we're seeing now. I like the cash to go through to give it a bit more conviction. But we're up here again. Been talking that stocks have dipped, but they're not dipping in a breaking terms. Although we have moved under that trend line. I probably need to get a shot of that. Let's do that now. Boom, gone. So yeah, we're looking like we may be having another go up here. We'll have to see if it's got enough impetus to do that. But on that front, thank you very much for joining us all this week and coming to the Flow Show. Thank you, as always, to K-Man for keeping me company here and giving all these wonderful insights. Hope you've had a good week. Have a great rest of the day. Have a fantastic weekend, and we'll see you all on Monday.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.